Hey guys, welcome to the channel. In this video, I'm going to explain how you can predict a shift in the market by understanding the concept of liquidity and how you can apply it to your own analysis, just as I did in this example on euro-dollar. So this is where price was when I did this prediction. It was around the 25th of May. And in this video, I'm going to walk you through my thought process of why I was expecting price to reverse from here and create exactly this kind of movement. Even though price had just broken all these important highs here on the left side, which was an important resistance level. And in theory, after price breaks out these highs, price should have continued to the upside. But this was not the case. And at the end of the video, I'm going to share with you a tip on how you can manage your trades in this kind of setups. But before I do that, let me just explain the process I follow anytime I do my analysis. I think it's something that can be really useful for you guys, especially if at the moment you still don't have a process that you consistently follow anytime you look at the market. And if that's the case, at least you can get some ideas from the way I do it and eventually create your own methods. By the way, let me know in the comments if you already have a process that you follow anytime you look at the market. And if yes, let me know if you have noticed any improvement on your trading. Okay guys, so what process do I use? So anytime I look at the market, I always ask 3 questions. And I keep repeating the same process anytime I go from the higher time frame to the lower time frame. And the reason I ask these questions is because it helps me to look at the market in a position of control, instead of being overwhelmed or overreact anytime there is a strange movement in the market. And that's a position that I like to be. I like to give the example that I'm playing chess with the market. By doing that, I'll be just reacting to what price is doing instead of guessing. So, what are those 3 questions? So question number 1 is, where is price coming from? Question number 2 is, where does price want to go? And question number 3 is, where is price at the moment? So in order to answer those 3 questions, you always have to look left, okay? All the information that we need is on the left side of the chart. Okay? Don't be lazy and don't just take into consideration the most recent price action, okay? Don't just look at what you can see in here, okay? Because if you have no idea where these highs, where all these highs are reacting from on the left side, you're basically ignoring, I don't know, 50% of the information that you can gather in order to find out exactly what's going on in the price, okay? Because you can easily say that, okay, price is in a bullish trend in here, and price is broke this double top, why not expecting price to carry on going higher? You will have your answer in there, okay? You have your answer on the left side. So don't be lazy when you are doing your analysis, okay? So let's take a look at the first question. Where is price coming from? Okay, in this scale, we can see that price is coming from these lows, okay? And what does that mean? What are we trying to find out by asking this question? Basically, you are trying to find out if there is space from this low to the next level of structure, okay? Okay, let me just give you a quick example of what I mean. So there are basically 3 scenarios that you can see when you're looking at the first question. Okay, so let's imagine that this is a origin of the move or a demand. Let's pretend that price is coming here from the left. Now it creates this demand in here, or this origin, goes higher, and now retraces and carry on to the upside. Okay, this is the first scenario. Second scenario, price when retraces actually goes to the target or to this demand and carry on. And the third scenario, price actually comes, breaks the demand or this origin, and then goes to the upside again. Okay, so we have these 3 scenarios, and you can see that on the first case, in the green scenario, we have space between the target and this wall. Okay, so there is space in here. Okay, the second scenario, the yellow one, price actually reacted from the target, so there is no space. And the third scenario, the white one, it actually broke this demand and it entered into a new scale, and that's another topic. okay? But eventually that means that we'll have some kind of space now from this low to the new target in another scale. That's a topic for another video. Okay, so we have these three scenarios: space, no space, space into a new scale. Okay, so now if we take a look at our example, let me just delete this. We can see that, in my opinion, there is space between this low and the next level of structure, the target, which would be maybe somewhere inside here. Okay, and depending on the answer that we get from these three scenarios, we'll get different information on what to expect next from the market. So let's take a look at second question. Where does price want to go? Basically, we are trying to find out where the targets are. In this case, where is the target from these lows? So you need to be aware of different variables when you are looking at targets. For example, on which scale is price playing at? Or, as I mentioned before, it's going to also depend on the answer of the first question. Just to give an example of what I usually do, I like to look for fresh zones at around important levels of structure. Basically, I'm trying to look for liquidity around those levels. So if we take a look at our example, we could basically see that this high was a valid target. Why? Because this is a higher time frame high. It is visible on a weekly, daily, 4-hour, and so on. And just by itself, it will be an interesting zone to attract sellers. And because that's one of the most common setups that everyone trades, which is to sell at the highs and buy at the lows without taking into consideration any kind of price action around the zone. And by doing that, you'll be just placing all the stop losses above this high, and that's perfect for the big boys to manipulate the market and to fulfill their orders just by collecting all their stop losses. Besides that, we also have this decision point inside here that was still fresh, that because this high never took those orders, and that creates a great setup because now we have a high to be faked out and to create liquidity into the real zone, which is perfect. Okay, that's basically what happened in there. So at this point, this is just half of the analysis, something that we can predict in advance just by looking at a higher time frame. Now we need to take a look at the last part of the equation, which is to see what kind of approach is price doing towards the zone. Okay, and basically this is the difference between guessing and reacting to what price is doing. If I wanted to guess, I could just do the higher time frame analysis that I just did, go somewhere inside this decision point that I mentioned, and place some kind of pending order in there. And that would be option 1. Actually, that was something that I used to do in the past. But now, before I execute a trade, I always look at the approach that price is doing. And I'm trying to find clear price action that tells me that price wants to turn. So what kind of approach or price action do I want to see before I look for the reversal? And this leads us to the third question. Where is price at the moment? Answering the third question is to find out if price is in the right moment to look for a trade. And for that to happen, the answer of this third question should be aligned with the previous two answers. Otherwise, we are still not in the right moment to look for this kind of trade. So there are a few possibilities of the kind of approach that we can see. For example, so what kind of price action do I like to see when I'm looking for a reversal? So if I'm looking for sales, I want to see some kind of movement to the downside even before price gets to my zone of interest. What I mean by that is, let's just say that price is going up and I want to see price creating a lower low, a lower high, and a lower low even before price gets to my zone of interest. Because after price creates this kind of price action, everyone's going to be thinking that we are in a bear trend. And then we are ready to create some kind of manipulation in order to collect stop losses from these sellers. And then price can reverse. And that will be my ideal price action. However, there are a few scenarios that price can create when it's approaching a zone. For example, if price is just going to the upside in a really strong move, not showing any weakness, any fight from the sellers, most likely I will just stay away from this move. Okay? Even if price reacts from there, I'm not expecting a deeper trace. Actually, I'm expecting price to continue to the upside. Another possibility, it will be for price to approach a zone in compression, basically cleaning out these orders on the way up. And in this case, I will be paying close attention to the price in order to wait for a proper engulf to the downside before looking for a sell opportunity. And then there is the third scenario, which is basically what happened. So price could go up and make it look like this high is being respected in here. creating a double top and eventually a triple top, which is a perfect scenario because this is one of the most common setups that traders look to trade, because this becomes now an important resistance level, and anytime that price retraces to the highs, it will attract more and more sellers. And what they don't know is that they are just creating a strong pool of liquidity just above it by placing their stop losses there, and eventually you'll see price faking out these highs, collecting all these stop losses, and then reversing to the downside. And this is where usually we see the big boys filling their orders after creating this manipulation just underneath it. Besides that, when we have this strong move to the upside, we also have the breakout traders jumping into the market, expecting price to go up after the break of this structure. And unfortunately, that's not what happened, and price carry on to the downside, collecting all the stop losses from these sellers and now from these buyers, making everyone upset. And basically, this setup that I just described in here, it's exactly what happened inside this area. Okay? So we had, let me just delete this. So basically, as you can see, let me just change this into our time frame. So as you can see in here, we had this high, and now we have price creating a double top, a triple top, and even when price tries to come back to the highs, we can see that price gets rejected again until eventually you have this strong move to the upside, creating this demand in here, which is a perfect scenario because after price created this strong move, we could expect that the breakout traders will jump into the market, expecting price to carry on to the upside. You can even see in here that we have price around this level of what was the previous resistance that now becomes support, and eventually you can still see that there were still people trying to buy at this demand. Okay, so you can see the rejections inside here and now at this demand level. However, it was not enough to make price break these previous highs because all the manipulation to the downside, it was already created, and now price was free to just go to the downside. Okay, and this was the first part of the manipulation, and this is exactly what I described it before. So basically just collected the stop losses from all these sellers, and now we just collected stop losses from all these buyers. And now we actually have an inverse situation in the downside. So basically we have now this double bottom. Maybe these guys were the last buyers interested in still trying to push price to the upside after seeing that price broke these highs. We can see that price still got rejected a few times around these lows, and eventually, once again, we see a really strong move to the downside, collecting all the stop losses that were here from these guys. And again, price goes and reverses. Basically what happened in here. Price went up, a strong move, and then reversed. And this is a clear example of how price creates all these structures around specific zones just to create as much liquidity as possible in order for the big boys or the institutionals to fill their orders. Okay, now let me just delete some of this stuff. Now, why was I still expecting price to have this deep retracement instead of maybe just reacting from there and go to the downside? The reason for that is basically because I knew that there were still orders around these highs that needed to be collected before actually price goes and creates the final move to the downside. And after this high was created, I could also see that there were still orders inside this origin. And it would be a waste to leave these orders behind before price goes to the downside. And basically that's it, guys. If you manage to understand how liquidity works in the market and how the big boys needs to create specific price action in order to fill their orders, you will eventually be able to start making these predictions and actually see how funny it is to see the manipulation being created in advance, which is a great position to be in. It's like you are one step ahead of the market. And this is an example of what I mentioned before when I use the expression of playing chess with the market. Now, for the tip that I mentioned at the beginning of the video on how you could manage this kind of setup, there were maybe a few options that you could look at in order to look for trades. However, I will just be focusing on two zones. inside here when this fake out is being created, and then when price retraces, which is inside here. So if you manage to enter short in the first position, my recommendation for you, it will be to either close all of it or most of it at the retest of these lows. Even in the scenario that I was expecting price to break these lows. The reason for that is, as I mentioned before, I was already expecting price to have a deep retrace to the origin. And unless you don't mind seeing price retracing to your entry zone and seeing all that potential profit going away, my recommendation it will be to close this first position at retest of these double lows. And now, after this deep retrace to the origin, we have our second possibility to enter short in this setup. And in this scenario, we can manage the trade in a different way, because we already have this confirmation that price wants to go down after the break of this double low, and we also have space between this low and the next target. And if we connect with all the analysis that we did before, we also have the information that there was a big possibility that price wanted to fill all this space. Okay, and that's my recommendation for you guys. Let me just delete this now. So before I go, guys, let me just do a quick review of what I covered in this video. So in this video, I try to explain how you can predict a shift in the market by understanding the concept of liquidity. And basically, you can do it by following these 3 steps. First, you need to see if price is at an important higher time frame zone. It can be highs, lows, support, resistance, something like that. And in order to find out, you always need to look left. Don't forget that. Secondly, we want to see how price is approaching the zone. Is price showing any weakness? Is price compressing? Is price breaking any structure in the opposite direction? Basically, what you are trying to find out is if price is creating manipulation in order to create any pools of liquidity in the right level. And third, we need to see if there is space to be filled in the market. Okay? Because without space, there is no trade. And basically, these are the 3 steps that you can follow in order to look for the trend reversal. By the way, let me know in the comments if you find it valuable for me to do these recaps in the end of the video. If you are still watching this video with me, first of all, let me thank you for that. And secondly, my recommendation for you, it will be for you to open your trading platform, go to Euro Dollar, and watch this video again and see how you could apply this method on your own strategy, even if you look at the market in a different way than I do. Besides that, I'll challenge you to find similar setups in the market. Look for higher time frame reversals, for example, at these lows, at these highs, inside here. Look for them and study them. Try to go through the process and see the similarities between the setups. For example, take a look at this dollar index setup and tell me in the comments if you can see the similarities between this setup in dollar index and the one that I just covered on euro dollar. And that's it, guys. If you got any value from this video, don't forget to like and subscribe to the channel. My goal is to upload similar content at least 2 times per week. Thank you so much for watching. See you next time. Obrigado.